Welcome back, dear traders. Our team is ready to tell you about the fresh market trends detected through careful analysis. The US stock market is poised to keep on its recovery. The major stock indexes are getting ground. Let's try to find out the underlying reasons for growing optimism and risks. Wall Street closed on Wednesday with a modest growth. The Nasdaq closed flat. The Dow Jones inched up 0.2% and the S&P 500 added 9 points or 0.2% to close at 4,241. The American pre-market today looks more optimistic. Analysts expect the index to trade in the corridor between 4,210 and 4,290. Despite the approaching Fed's policy meeting, Wall Street indexes have found the reason for optimism. The equity market is propped up by a series of corporate reports. Investors are pleased about the quarterly results of Meta, whose stocks jumped 17.7% in light of news about an increasing number of users. Stocks of Tesla, Amazon, Microsoft and Visa showed modest gains. Albeit revenue forecast of high-tech giants calmed down fears about a slowdown in the global economy. As of now, almost a third of the companies included in the S&P 500 have already reported their financial results for the first quarter. The overall records are not as dismal as expected. Nearly 80% of 176 companies included in the S&P 500 surpassed Wall Street expectations, though commonly 66% of them report better than expected results. Later today, Apple, Amazon and MasterCard are due to unveil their financial records that could be another driving force for the stock market. A trajectory will depend on the reported data. It seems that investors are desperately seeking the upside so that they are ready to find it even in a modest reports. Meanwhile, the US dollar is extending its stunning rally. On Wednesday, its index surged to 103.35, having surpassed 103 points for the first time since January 2017. Analysts agree that the greenback should make a technical correction, but there are no preconditions for stalling its rally. The index is likely to trade today in the corridor between 103.30 and 103.80. The US dollar owes its strength to the Federal Reserve and the COVID breakout in China. The US Fed is stepping up its hawkish rhetoric while COVID rates in China are going down slowly but surely. Last week, Fed Chairman Jerome Powell confirmed his intention to curb inflation off its 40-year peak. So he dispelled doubts about a rate hike by 50 basis points on May 4 and perhaps at a following policy meeting. Amid the Fed's hawkish stance and the dovish rhetoric of the ECB and the Bank of Japan, the yen weakened to a 20-year low and the euro slumped to a 5-year low against the US dollar. Analysts predict that the euro-dollar pair is on its way to the parity level of 1.00. Thus, if the greenback continues its rally, it could peak at 103.82, the record high since late 2002. The outlook for the US dollar remains bullish. Recent macroeconomic data still suggests the fast rate hike by the Federal Reserve, and the data released today indicate a sharper than expected contraction in the US GDP. The US economy shrank by 1.4% in annual terms, much worse than the consensus. The market had projected the GDP to contract to 1.1% from 6.9% in the fourth quarter. At the same time, the labor market remains healthy. The number of initial unemployment claims declined by 5,000 last week to 180,000 from 185,000 in line with the expectations. The USD CAD pair closed at 1.2820 on Wednesday. Its intraday corridor is defined between 1.2800 and 1.2900. The loonie is wound down by a global risk aversion. The currency pair has already approached 1.29, the highest mark in the last 6 weeks. It's likely to face a strong resistance and a drop of it. In global terms, the Canadian dollar, like other currencies, are giving in to the firm US dollar despite the hawkish outlook for further policy moves of the Canadian regulator. Even though oil prices are going on with a growth, it's not enough to support the loonie. All in all, there is a slim chance for the trend reversal in the USD CAD pair. All we can expect is a downward correction. As for the number one cryptocurrency, Bitcoin is trying to regain its footing and settle above 39,000 with attempts to touch $40,000. The price is oscillating in the range between 32,000 and 48,000 after 3 failed attempts to hit the upper border. In the context of global risk aversion and in the run-up to the Fed's meeting, it's too early to predict the bullish trend in the crypto market. In the medium term, Bitcoin will try once again to settle above 40,000. If it does not happen, the crypto might again slip to 38,600. To sum up, the downbeat GDP data and the healthy labor market still benefits the US dollar. Notably, the equity market is shifting focus away from the Fed's inevitable monetary tightening towards corporate reports. Thus, Wall Street could add more gains unless investors are discouraged by records of top US companies. See you tomorrow.